Hello, guys. Welcome to our new learning series, Candlestick Patterns. In this series, we'll learn many different candlestick patterns, starting with the hammer today. Okay, so let's start. So all this is previous chart. Let's try to explain this by using the same chart that we use daily with the help of some drawings here. Okay, so in order to you can take screenshots in between for your reference, or watch the video many times as you can so that you become very familiar with the concept. Okay, so in order to learn the candlestick pattern called hammer, before that you need to know with the terminology called umbrella line. Okay, this is this is a terminology. Umbrella line is a terminology which is used to represent a particular type of candle formation. So let us see what an umbrella line is. Suppose if you have a candle like this, suppose if you had a candle like this, either the wick is red or green, doesn't matter. Okay, all you need is any candle which has a long wick towards the bottom, and it's open and close towards the uppermost part of the candle. Okay, so it can be red, it can be green, it doesn't matter. See, all we are looking for is any candle which has the body of the candle, the real body of the candle, you see, within the topmost range of your candle, and has a long lower body. So see, even any candle which is looking like that is a will fall under a category. So these candle formations will fall under the category called umbrella lines. Okay, so these are called umbrella lines. Now it can have a very small a wick towards the bottom, sorry, on the top, but not much. It only a very small amount of wick or a shadow on the upper side is allowed, but not bigger than the real candle. I mean, not bigger than the real body of this candle. Okay. So even these are called umbrella lines. So if there is no wick on the top, it can also be called as umbrella line. So in this case, these two candle formations are called umbrella lines. Okay. So now, depending on where this umbrella line is coming in a price chart, okay, depending on where these two candles are coming in the price chart, based on that we can call this as hammer, and there's something called hanging man. Okay? Now, very simple. If your umbrella line is coming after a reasonable downtrend, then it is called hammer. Okay, then in that case this is called hammer. Okay, suppose you have a price, say, coming down. Okay, suppose you have a price coming down and you have a similar candlestick formation like this. or this. Okay, irrespective of their color. Now if you see this formation after a downtrend, it is called hammer. Okay, then what is a hanging man? Hanging man is simply the opposite of the hammer. Means you need to see this candle after an uptrend. After an uptrend, okay, it is called hanging man. Okay, so you need to see your candle formation after an uptrend to call it as a hanging man. And you need to see after an uptrend. So in both the cases, you cannot name this candle as a hammer or a hanging man just by looking at the candle alone. You need to see the prior trend before this candle formation. If the candle appears after a downtrend, reasonable downtrend, okay, it is called hammer. And if you see this similar candle formation after an uptrend, then that is called hanging man. For the obvious reason, it is called hanging man because it looks like a hanging man with a dangling legs. Okay, so for the time being, let's discuss about hammer, and later see what hanging man is. So now let's talk about the rules of the hammer. Okay, now let's see what our rules are in order to classify any candle as a hammer formation. See, the very first point to be considered is, okay, the candle's closure should be, means the real body of the candle should be in the upper end of the candle's range. That is your first condition. And your second condition should be bottom wick should be at least 2 to 3 times the body size. Don't worry, we'll look at the real time candles in our Bank Nifty chart, and I'll explain you with the real time example. And the third point is, you need no upper shadow or wick, or wick or shadow not bigger than the real body. So these are the 3 points that you need to remember before with the candlestick pattern. Okay, so the first point is, the real body of the candle should be in the upper end of the candle range, which means this. You need to see a candle's real body towards the upper part of your entire candle's range. Second thing is, bottom wick should be at least 2 to 3 times to the body size. So this lower shadow or wick should be at least 2 times to the size of this real body. Okay, and the last point is, no upper wick or a shadow is bigger than the real body. So all, if your candle, any candle meets these three criterias, it can be called as hammer. Okay, So, and what is the rule in order to consider this as a hammer? Okay, what is the rule in order to consider this as a hammer is it should appear, it must appear after a downtrend. Only in that case it is called a hammer. You cannot identify a candle in the sideways market and call it as a hammer. So if all these criteria is met, you're sure now that this is a hammer. Okay, so general name of this hammer is called umbrella line. If the umbrella line is coming after a downtrend, it is called hammer. If it is coming after an uptrend, we'll call it hanging man, which will cover in another section. Okay, so now if you are okay with this criteria, you can take a, if you already got it, it's good. If not, take a notes or take a screenshot, because this is going to help you a lot for your trading. Okay, and most importantly, this is one of those candles. See, this is a single candle formation we're talking about today. So there are dual candle setup. There are two candles, like engulfing pattern or harami inside candle. Okay, and there is dark cloud cover. All these candles will have needs two candles to form that particular candle pattern. And in some patterns we have three candles, like morning star, evening star. Okay, and some particular formations will have more than three candles. But this is, we'll talk about all those candle formations in the future, but in this video we are targeting to learn umbrella line. In particularly, we're talking about hammer. Okay, so this is a very 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 important candle formation because of the frequency that this will occur in your daily trading. This is not something that you learn uh, in this video, and it's not like you'll never see it, you'll see. No, it's not like that. This is such a candlestick pattern where you will notice this pattern. Okay, in almost every day. So if you have patience to observe this candlestick, okay, this will appear many times in the market, in the intraday market time frame, say 5 minutes. So you can get benefited out of this. So it is, so till now it's all fine, because we have covered all these points. We know what is a hammer, and we know how, when to call it a hammer, after which trend to call it a hammer, and all that. So how can we get benefited out of this candlestick pattern? Okay, very simple. This indicates that, the prices from here can go, can the price from, because it is coming after the downtrend. Okay, this candle is an indication that the trend is going to change. Remember, the trend is going to change. Okay, which means that a trend can also go to a sideways. Not necessarily that the trend has to go uh, upside. Okay, it only means that prices have come down towards the bottom range of the candle in that particular time frame, but failed to close towards the bottom portion of the candle, and has gone up and closed towards the top range of the candle, which means that there is some buying pressure here in this wick area. Okay, now to make it even, now to make this candle okay, even workable, what we should look for is the location where this candle is forming. Okay, in other words, location is as important as candle pattern. Which means, if you are seeing this candle at a support area, then that adds to the confirmation that the prices have gone into the support area or touched the support area but failed to close near that support area towards the bottom range of the candle. So in that case, you can assume that the market can go can change the direction and go in the upward direction. So now, so how to make use of this, or how to exactly take an entry, we'll also talk about that. How, where to take an entry? Simple, you must always take an entry into the candle's closure. Suppose if this is a 5-minute candle, you will enter into this candle's closing, that is just before 5 seconds of candle closing. That is when you should enter. Don't worry, don't hurry up in learning things. we'll talk about we'll talk about hanging man in detail as we are talking about hammer here. Let's concentrate only on hammer. We'll talk about these conditions criterias, because hammer and hanging man are different. Okay, because you can enter into a hammer candle before its closure, but you cannot enter into your hanging man candle after an uptrend immediately. So we'll talk about that hanging man part later. So for now, you can enter whenever you see this candle formation near any support area or any important swing lows, or in the location of this candle is very important. So if you are entering into this particular candle into the closing area, obviously your stop loss would be your stop loss would be the bottom part of this hammer. Or if you see any previous recent low in the last 5 candles, you can also keep that as your stop loss. Okay, but in general, this same candle's low is going to act as your stop loss. Now let's summarize all these points together and see, and let's get into the real market. Let's try to identify this particular candle formation in our daily bank nifty charts. To summarize, the candle must have a real body towards the top portion of your candle, and the second point is it should have the wick size at least 2 times, 2 to 3 times of your real body, and the third point is it can have a very minimal wick or no wick at all in order to consider this as your hammer. Okay, so now after this, you should be calling this umbrella line as a hammer only if it is coming after a downtrend. Okay, and the entry with this candle is into the entry into any of your trades will be towards the completion of the candle pattern, and your stop loss would be the bottom line of this. And most important, location. So where location is important as much as the candle pattern. All right, so now let's look into our bank nifty. This is your bank nifty daily charts. This is our last working day. Today is 23rd of October, and this is today is 21st of October, and this is your previous day's chart. Now let's see where all we can find this hammer. Okay, can you notice? Can you take a minute? Can you pause for a minute and notice where the hammer is in this area? Yes, that's your hammer candle. Okay, and this is hammer because it has come after this downtrend. Okay, after this downtrend, all these are traits that you have taken yesterday, so I'll just clear those off. Okay, and this is our uh, support area on a daily time frame, so we'll take that off. So you have noticed, okay, your candlestick here, which is coming after the downtrend, help help the market to move in the upward direction. Okay, so that is one. And let's see, so I'm deleting all of our previous trades here. Okay, so now notice this candle. Notice this candle, it has a upper body, and the wick is at least two times of the real body, and it is coming after a downtrend, and it doesn't have any major wick on the upside. It is coming after downtrend. So this is the candle we are talking about. There is this hammer. You see how prices have gone from there to here and again there. Okay, so this candle formation helped you to identify this upward trend much before it happened. Okay, so we have seen two. Let's see if there is any other hammer. Yes, you see here, from previous day, from previous day's close, the market has opened gap down, and there is a big down move here. Okay, and this particular candle is our hammer. This particular candle is our hammer. Let me zoom into it. Okay, let me zoom into it. Yeah, you see it has got a very little upper shadow, and it has got a wick which is more than 2 3 times of the real body, and it is coming after a downtrend, and that help prices move in the upward direction. You can see an immediate uptrend after that, right? So is there any hammer here? Is there any hammer here? Yes, there is a hammer. Okay, let me delete that. Yes, see, now this candle is also a hammer. Okay, now this has got very little or no real body. This is called a dragonfly hammer. This is called a dragonfly hammer, and it is coming after this downtrend. Okay, and it is coming at this support area. So all this are telling that the prices may change, the direction of the market is going to change. As I told you earlier, it is not always necessary for to imagine that this candlestick pattern is telling us that the market is going in the upward direction. This candlestick pattern is always an indication of the previous trend is getting over. So now here the previous trend is downtrend. In this case, it has gone sideways. The previous uptrend is killed here, and that turned into a sideways trend here. So this is a stop loss trade. Okay, so that is a stop loss trade. So the day before, the day before there. Now see, this is not a hammer, and even this is not a hammer because they have a little longer upper shadows or wicks. It has an upper wick. This has also got an upper wick more than the real body. So it doesn't meet our criteria to consider it as a hammer. All right. So yeah. So now here it becomes little tricky because in this case the prices have gone the upward direction, and from there they have again come down and formed this big rejection candle, okay, which is close to our umbrella line, but it's not our it's not our hammer because it has got a long upper shadow. But the candle after that, here, this particular red candle is a hammer because it has exactly two times the wick of to the real body, and it is coming after a short downtrend. Okay, so from there prices have, so now this is your, this is your hammer, and from there prices have gone up. Okay, and you see here in this particular day, that is 13th of October, market has seen a downtrend here. Okay, market has seen a downtrend here, and you see, you notice this candle here, which is coming after a downtrend. This is a perfect hammer that I can say. This, see, color of the hammer is not important. The formation of the candle is, okay, and this is coming at all these rejection areas, and it is coming after a downturn. It has got no upper shadow. It has got a wick which is more than two times of the real body. You see, it has got a wick more than two times of the real body. So with all this we can, then this is also a second hammer. See, after within no time, it is also a second hammer, okay, at the same level. You would keep your stop loss at this bottom portion of the candle, and see what has happened that day. See what has happened that day. Okay, see, it's okay to face some, stop losses here and there, okay, but when you win, see, no candlestick pattern. See, suppose here is your stop loss trade, okay, but couple of days before, here's your profit trade, okay, and here is your double hammer formation at the same support area. It's okay. So none of your candlestick patterns or none of the technical analysis can give you profits 100% of the time. So even hammer is no exception. You will see a couple of stop losses here and there, but it'll also give you profits like you have never imagined before. See, this particular day has given you 302 points movement in 40 bars, that is 3 hour 20 minutes of time. Imagine how much you would have made with just this candle hammer. Okay, so I suggest you to go back and do some back testing here. See, even there is a hammer here, okay, after the downward movement, there is at least 1 is to 1 profit there. Your minimum profit should be 1 is to 1, also remember that. Okay, any trade that you take, always take it in terms of risk versus reward ratio. So your minimum risk versus reward ratio should be at least 1. All right, now you see, now here you see there is a downward movement there, okay, and this candle right here, the red candle, is a hammer. Let's zoom in a bit. Let's zoom in a bit and see our body. So our first criteria is met, it is not bigger than the real body. And the second point is the lower wick is 15 points. So let's measure the upper wick, I mean the real body. So it is 7 here. So it is exactly two times to the size of this real body. The bottom wick is exactly two times the size of a real body. So this is a proper hammer. See, now this is also a proper hammer. Okay. Yes, it has seen some stop loss in this case, but it's okay to give a stop loss of 21 points for the sake of see how big you are winning. Whenever you are losing only one candle, but whenever you are making profit, see see what is the probability and see the risk versus reward ratio. It has gone 412 points. So I'll leave the rest of the back testing for you. You back test minimum at least for 2 months. You know how to back test, you know what are the 3 points. So let's quickly summarize those. Okay, since the video is going so long, let's quickly summarize the points. See, the first point is real body of the candle should be towards the upper end of the entire candles range here. Okay, and the bottom portion of the wick should be at least two times to the size of your real body, and it should have no or very little wick, which shouldn't be more than your real body. And the location of your hammer should be, location is very important. Okay, and also it can be only called as hammer only when you see it appearing after a reasonable downtrend. It can be a short downtrend also, but there must be some downtrend previous to this candle formation. Okay, I hope you have liked today's video. If you understand, I hope you have understood this concept very well. So please consider subscribing for more such valuable content. We'll talk about uh, more candle formations starting with the hammer today. We'll talk about more candle formations in the future. We'll cover it in depth detail and by using the real-time bank nifty examples. All right. So please do back testing, and please always don't forget to consider your risk versus reward ratio and be patient with the market. Thank you. Thanks for watching.